Good evening, everyone. ICAI Iqbal Singh Grover welcome you all to this virtual CPE meeting on Management Accounting Insights, Management Information Reporting, being hosted by Sirsa branch of NIRC of ICAI, and of course, being organized by Committee on Management Accounting of ICAI. Before I commence, I would request all my panelists to kindly mute themselves whenever they're not speaking. All right, so otherwise the sound will echo. I now request CA Ritun Surwala, Chairman of Sirsa Branch, to kindly give his welcome address and introduce CA Charanjot Singh Nanda ji to everyone.
Thank you, Iqbal ji, for providing me a great opportunity to be host a wonderful seminar about from the ground of Committee of Management Accounting. Our first seminar, the Sirsa branch is organizing and actually hosting this seminar. And I especially thanks to Nanda ji to give us, providing us such a great opportunity to be interact with the fabulous faculty of the such era. Especially Nanda ji is very charming and energetic personality in this era. And I first of all congrats Nanda ji for 30 years of professional practice. तो सर मेरी उम्र 32 साल है और सर 30 साल के सीए प्रैक्टिस कर रहे हैं. जब मैं 2 साल का था सर सीए बन चुके थे. तो ये और सर से हमें इतना कुछ सीखने को मिलता है इन टाइम बिटवीन. और मेरी काफी टाइम इंटरेक्शन रहा, लो टाइम इंटरेक्ट विद नंदा जी, बट देयर मैसेजेस एंड देयर इंस्पायरेशन इज ऑलवेज इंस्पायर अस टू डू अ गुड and think beyond our limits. A few words. Nanda ji is a Central Council member for 19 and 22 batch. I also welcome CA Rajesh Bansal ji, my secretary of Sirsa branch.
Rajesh ji, please mute yourself.
Thank you.
Sir is now chairman of Internal Audit Standard Board and the chairman of Management Accounting in the current year, and he is doing a fabulous work in this era and in this particular field. I also thanks and welcome Nand Kishore ji, Vice Chairman of Committee of Management Accounting. And I also welcome CA Atul ji, Management of Audit Committee of Yes Bank. एक्चुअली नंदा जी के लिए कुछ भी कहे जाए, वो इतने कमेटीज में इतने वर्कआउट कर चुके हैं इंस्टीट्यूट प्रोफेशनल अपॉर्चुनिटीज प्रोफेशनल वर्क के लिए. द वर्ड्स आर लिमिट, बट नंदा जी एक्सपोजर एंड नंदा जी वर्किंग इज माइंड ब्लोइंग. ही इज ऑलवेज इंस्पायरेशन फॉर एवरीवन. So I welcome you all to this seminar on behalf of Sirsa branch.
Thank you, Ritun ji. Rajesh ji, please.
Okay. Thank you.
All right. Thank you, Ritun ji. Now I request Nanda Sahab to kindly address the audience.
So very good evening, ladies and gentlemen. We are back with yet another exciting program on management information reporting. I have with me the chief guest of the day, my brother CA Atul Bhida, with whom I had a long stint of 9 years in the Central Council. Mr. Bhida now is the chairman of the audit committee of Yes Bank, a person who's deeply involved in ensuring that the profession moves up to the greatest level. I also have CA Narasimha Murthy, a very senior chartered accountant and a cost accountant who is on several boards. When you listen to his biodata, his and Atulji's biodata, there are so illustrious people who have made this profession great, made this profession proud. I also have with me CA Iqbal Singh Grover, my younger brother and former chairman of Amritsar branch, CA Ritun Sahuwala, the chairman of Sirsa branch, and my very dear friend and brother Rajesh Bansal, who is the secretary of the Sirsa branch, apart from the secretariat and all participating members. Ladies and gentlemen, you are well aware that the Institute of Chartered Accountants of India was set up an Act of Parliament way back on 1st July 1949, when the most important document to the democracy, the Constitution, was not adopted. All of you are well aware that the Constitution to this great country was adopted on 26 January 1950. The question which is apparently asked is, what prompted the Constituent Assembly to set up an Institute of Chartered Accountants of India even before setting up the Constitution? The answer is very candid, very simple, very forthcoming. They were looking for a disciplined band of soldiers to steer this country out of confusion. Ladies and gentlemen, we are again at crossroads, and we have to again work incessantly to ensure that this great country comes out of all turmoil and is again on the back of great progress. The topic today is on management information reporting. Management information reporting is a communication method that lets business managers convey ideas and concepts to an audience which understands market trends and ensures an efficient business operation, essentially to increase the value of the business. Management accountants use management information reports to help their companies improve internally, along with increasing sales, revenue, and visibility to a wider outside audience. Management information reporting helps organizations to understand and improve business strategies and operations, which is essentially a very important part which a management accountant does. In the management accounting field, management information reporting is explained as the interaction and cooperation of groups, individuals, and entities to design, manage, and implement systems that work to improve the time and efficiency of performing business tasks, and more importantly, continuing proficiency of the business to attain the desired objectives of the management. Management information reporting is used by small, medium, large business and other facilities, and regardless of the sector, to improve operations. What are the best practices of management information reporting? First, if you have to give a management information reporting, you need to set the strategic goals and objectives and then dwell upon the desired agenda so as to give the best to the corporation or to the board you are serving. Choose the right key performance indicators, which we call as KPIs, for your audience. Yes, you have to read the management information reporting and whether you should use the historic data or recent trends so as to know where the management needs to focus. The third very important area is take customer feedback into consideration. I am reminded of Hike, which was set up by Mr. Sunil Bharti's son. Compared to WhatsApp, Hike was at a back foot. The reason was it never went for constructive customer feedback. Constructive customer feedback will ultimately pave the way for your constant innovation and growth, which is incessant. Going ahead, a management information reporting wants to go digital. Today is the time of technology. How technology can leverage. I happen to be the chairman of International Standard Board also. Last year, the theme of our International Standard Board for all programs was empowering SMPs, empowering small and medium practitioners. This year, since 12th February 2021, the theme of the programs is technology as an enabler of internal audit process. So management information reporting essentially has to rest upon the best of the technology, a robust growth. The next is encourage a data-driven culture. A culture wherein every data is stored and exception reporting is done. To end with, I would just like to emphasize on few benefits of management information reporting. The first, measuring strategic metrics to assess and monitor the performance. Performance has to be very closely monitored and understood in terms of absolute growth, which a management information report will always give. Setting clear-cut performance benchmarks. You have to have benchmarks either nationally or internationally and ultimately dwell upon them. The third is learning and reproducing for the benefit of all people who are on board. The fourth is enhancing communication. This pandemic has put us at a place where we don't understand how we have to go. The profession at times is set to criticism. But we are people who are never deterred by criticism. There is a couplet in Urdu which I shall recite. The couplet says, तारीफ की चाहत तो नाकाम लोगों की फितरत है. तारीफ की चाहत तो नाकाम लोगों की फितरत है. काबिल लोगों के तो दुश्मन भी कायल होते हैं. I will give the English version, which means there are people who are competent, need no praises because their bitterest of enemies regard them. They are applauding them for the value which they have. So, ladies and gentlemen, the last area where we need to, the last benefit of having a very efficient information system is fostering continual business growth. If the business perpetually grows, it is a great boost to the entire process of management information reporting. Ladies and gentlemen, we have two of the very revered people, Mr. Atul Bheda, a former council colleague who is on the board of Yes Bank, the audit committee chairman, a man who has helped Yes Bank come out of the crisis, and Mr. K. Narasimha Murthy, who's, if you go through the biodata of Mr. K. Narasimha Murthy, you'll be so elated because he has been on the board of so many companies and is presently also on the board of so many companies and adoring the boards of very big professionally managed companies like National Stock Exchange. Not taking much of the time, I go back to the master of the ceremony, C. Iqbal Singh, for further proceedings. Over to Mr. Iqbal Singh.
Thank you, Nandaji, for laying the foundation of this wonderful knowledge sharing session. Very rightfully said, management information reporting focuses on enabling the management to take better decisions for the future growth of the organization. Moving forward to the next segment, now it's time to listen to CA Atul Bheda ji. But before we do that, let me introduce him to all of you. And let me be very honest, the profile that I've received, it will take me a really long time to read the entire profile. So I've just summarized it so that I'm able to finish in 30 to 45 seconds. But it's just the tip of the iceberg. It is my proud privilege to introduce the lighthouse of knowledge and wisdom, CA Atul Bheda ji. He's an extremely well-read man and a vastly experienced one too. He's into practice for the last 35 years in area of taxes, audits, computer software development, finance, corporate laws, and various other professional assignments he's been taking. He's currently the audit committee chairman of Yes Bank Limited. He was appointed as the non-executive director by the government of India for Yes Bank. And as Nanda Sahab said, he's been instrumental in the revival of Yes Bank in the last 1 year or so. He served as of ICAI for 2007 to 2013. And before that, he was the chairman of WIRC of ICAI in the year 2001, which I am told is the golden jubilee year of WIRC. He's also very socially active as he's a board member of a number of NGOs. And with this, I request Atulji to commence his deliberations.
Welcome, Atulji. Welcome to this August gathering.
Thank you, Nandaji. Thank you so much, Iqbal, for presenting a very great introduction. Thank you, Nandaji, for giving this opportunity to have an interaction with a very, very concurrent topic for me as such. And seeing from both the sides, I'll try to see, about the financial accounting and this management accounting. And that has helped a lot. I'll try and see and try to address how it is important, so important. Ritunji, the chairman of the branch, and also Mr. Rajesh Bansal, the secretary of the branch. We also have Mr. Surinder Pal, the secretary of the committee. So once again, Nandaji, thank you so much. I know, and all of us know the versatile personality of Mr. Nanda. I have been, personally interacting with him for many, many years. I think it should be more than 20 years because fortunately we were also together in the regional council. Only thing, the regional councils were different. He was there in the NIRC and I was there in the WIRC. But because those times we had a good interaction between the regional councils also, and we did had some occasions where we did meet when we were in the respective regional councils. But once coming to the central council, I think both of us have shared an excellent relationship, and we know how Nandaji was, speaking, how he was presenting his views, and therefore, in spite of taking a break of one full term, that is 3 years, he was again re-elected as a central council member. I think that is a great achievement. Nandaji, congratulations and wish you all the best for all the endeavors. I know you are being, there as a very, very strong candidates for some future assignments. Wish you all the best for that. Yes, yeah. So now when we come to the topic per se today, we talk about something relating to the accounting, and we talk about something relating to the management accounting. Now I was just trying to understand, that if we talk about management accounting, if I talk about management accounting, most of us are, or all of us are chartered accountants. We are generally concerned with the financial accounting. So what could be that, what I can speak on the management accounting, and what is that it differs from our traditional financial accounting. So if I talk about the management accounting, yeah, it is a system of the part of management control system that provides the business information, and this information can be form of some reports from statements, and it is designed to assist the members of the management, including the board, by providing very, very timely, pertinent information. And this I can say because I've seen the both sides of it. As a professional practicing chartered accountant, financial accounting was also always a forte, and now being there in the corporate world, you understand that yes, financial accounting is very, very important, but when you come to take some decisions as a board, I think this management accounting, the information which is there, is quite different from what we get from the financial accounting, and this helps a lot. I will try and touch upon that few of the things which has really some practical tips or practical experiences of all this, and try to share this. But when I talk about this particular management information, it captures the data which is needed by the management to run the business effectively, and that is the key word. And this data could range from huge. It could be financial data, it could be employees data, it could be product data, it could be client data, it could be investment performance, and the scope is really, really very wide. And so if I want to say that, what are the reasons where the enterprise should have this sort of system is, maybe I could present in few points, like there should be a constant need of reports for the decision making and analysis of the trends. I think this is very, very important, and we have seen that if I can predict the trend, I think I can predict the business. If I can predict the business, I can know what is going to come in the next few years. Like, say for example, none of us ever dreamt of this sort of event happening, where all of us are sitting at home and try to run our business. Like the time when, as Nandaji said, about the Yes Bank, when I took over as the board member, and in the same week, there was a lockdown all India. And very unfortunately, up till now, there have been no physical meetings happening. All the meetings, all the things have been absolutely through the internet, virtual meetings, national, international, everything. Never ever anybody expected this, But yes, we came with a challenge was there, and challenge was accepted. And why this all things were happening? Maybe the reports, other than the financial reports, were always available even through these difficult times. So therefore, these constant reports which are coming helped us a lot in the decision making and analysis of trend. Then thereafter, these reports being unbelievable, and with the right stakeholders at the right time, because we never believed that this sort of reports can be there, this sort of report should, but as the things move, you require to have this particular data that could be really helping the progress. Otherwise, your visibility would really be very, very, blurred visibility, because if this data is not there, you will not be able to visualize that what would be your business, And really that becomes a challenge for people sitting at the management, people sitting at the board. And therefore this data also has to be such whereby it is not redundant, it is not the duplication of the data, and all this will otherwise lead to error. Because if we rely on such sort of data, the decisions which we make would be slightly difficult to make, and it could be a wrong decisions, it could be an erroneous decision, which could lead the decisions whereby whereby the corporates or the entities can go into great loss. So if I can put it in a summary form, the effective management reporting and management information reporting can be helping in improved decision making. One, two, improved management effectively, improve the responsiveness to the issues, and improve the efficiency of the resources in delivery of the organization services. This is what I can summarize with the experience which we had for the turnaround of this Yes Bank, which was in the red. Last 2 quarters we have shown profit. Maybe this sort of information which was there, we were able to do this, maybe effective decision making, effective management decisions, responsiveness to the various issues, and I think that really helps a lot. And this is a great importance as far as we talk about the management information reporting is concerned. If I say traditionally, if I talk about the financial accounting, we talk about very traditional profit and loss account, balance sheet, accounts payable, accounts receivable, cash flow. This could be some of my routine financial information, and which is maybe for the legal compliances, which is majoritarily for the external purposes. And there could be some standards. I should have every weekly, monthly, quarterly, half yearly, yearly. I have to declare results to various regulators. I have to declare results to the public at large, to the various stakeholders. So these are all typical financial reports now, and most of them are mandatory. They are very standard format. That okay, I have to report it in this format. This is what is the format given by a regulator or by a law, or maybe somewhere which is required to be published. If I go to the management accounting, I think majority time it is for the internal use of the management. And it could be management here, I also mean the board of directors and the senior management team who really leads the business, who really runs the business. So this management reports are great for the maybe all the people who are into running of this business to gain an insight on specific areas of the business. Now, if I want to have the reports that really help me, I should have the right reports of that business. That will drive the strategy decision making. I'll come to that a little bit later, but that becomes very, very important. So if I can, when I talk about financial and the management accounting, I could visualize few differences. As I said, one is financial accounting is majority for the external purpose. That is, maybe it could be for the regulators, it could for investors, it could be for government, whatever. But if I talk about the internal management information, it is for the internal purpose. It could be for the CEO, the chief executive officer, that he decides, okay, this is what I want to do. It could be for the top management team who runs the business. It could be for the owners. It could be for the board of directors, where it gives the information of the business, which is often great utility. Other major difference, if I can say, if I talk about the financial accounting information, it is mostly a mandatory information which is there. That is, the entity must adhere to all the set of informations all the standards, all the guidance notes as required by the various regulators and the law. If I go to the management accounting, if I see, it is not a very standardized things. Each management, each entity, each teams decide their own formats and contents of that this reports, which could be helping them in the business and identifying the areas which are having problems and which requires the improvement. The next difference, if I can say, is if I talk about the financial accounting, it is an overall financial accounting. That is, overall financial health is being presented. It shows the company's performance given on a particular date or a particular period. If I go to management accounting, generally, it does not talk about overall things. It talk about various segments, and these segments could be anything. These segments could be, it could be, maybe choosing exactly what you want in the segment. Maybe profit and loss account is there, but then that profit and loss account by a class, maybe by a job, maybe by a team, maybe by a department, so that the performance evaluation happens on the different parameters. So it is segmented. If I again see the another difference about financial and management is, financial accounting is mostly or rather always as per the standards, accounting standards. While if I talk about the management accounting, it is, as I said, suiting the requirement of the management, of the board, of the industry, and therefore you can have these reports based on the requirement what you like to have in that reports. And the most important, that the financial accounting looks at the backward and how your company had performed. But when I talk about the management accounting, it helps me in making the predictions about the future growth and the profitability of the entity, of the company, of the industry. And really, as the board member, this is which gives me a great comfort, utility, and a scope whereby I can really see what can be done about this particular accounting part of it. If I can broadly say that, what could be of a great, utility, it could be, if I say if I share my experiences, I can say it helps me in deciding the goals of the institution for the next few years, for the next few periods. It also helps me in building the strategy for having that goals to be reached. It also guides me that what are the delivery modes of this particular goals and the strategy. And finally, it can help me in building up the structures for the operation of my business, which is naturally the base would be the financial accounting, but this management accounting helps me in really promoting all these things. So maybe if I take example of the institution like bank, if I say, what would I see in management accounting, maybe the most important thing is superior and consistent client experiences, because everywhere client is the god. So maybe for any institution, any business, the client becomes very important. So whether I have a superior and consistently client experience or not, I think that could be one of the very, very key thing. Then deep relationships with the clients, and then assisting in the frontline businesses and recoup of the developments. So maybe these are the few things which generally are not there in the financial accounting, but in management accounting, we have to look into all this very, very detailed analysis of the facts which were there, how I look at the future, how I look at my goals, what is the strategy for achieving that goals, where I would be delivering this, and what would be the operating sectors for all these things. So if I say management accounting really helps me to do the SWOT analysis of the company. I think with this I have tried to give an overview about my experiences of this financial accounting, management accounting, how important it is in the decision making process for the people on the top, and thereby percolating these decisions right to the down, and making understand people that what has gone is your financial accounting, what is coming, this will be helping us, that will give us the detailings which are there from the management accounting. With this, I think I would stop here, giving my some preliminary
Yes,
remarks.
sir.
And I once again I would thank the
ठीक है,
committee,
sir.
especially the chairman of the committee, Nandaji,
ठीक है, sir. ठीक
and also
ठीक
whole of the
ओके
team. And I would also recognize Mr. Narasimha Murthy, my co-speaker today, and I am told he is greatly learned speaker. So I'm sure Mr. Murthy, I have not touched upon many things which you will be guiding us in this session. I just thought making something which has practically helped me during the process of last 1 year, how the transformation. Once
हाँ
again, thank you very much, Nandaji. Back to you.
Thank you, sir, for a very scintillating presentation. Thank you so much.
Thank you, Atulji, for this crisp session of yours. You've highlighted the differences and the correlation between the financial as well as the management accounting. And you've also told the audience about the importance of data and how to extract the best information out of it. I think one of the panelists is on unmute. I request him or her to please mute himself. And yes, of course, the importance of data and how to extract the best information out of it. And of course, the technology plays a very important role, and we as chartered accountants must use the technology to the best of its advantage to provide excellent services to our clients. Moving forward, now it's turn to listen to Mr. Narasimha Murthy. And before that, let me introduce him to all of you. He too is an excellent, well-read man with an excellent background. Let me just tell you, he has held a brilliant academic record, getting ranks in both CA and ICAI courses before entering the profession of cost and management accountancy in 1983. He is associated with the development of cost and management information systems for more than 175 companies covering more than 50 industries. In addition, he is closely associated with the turning around of many large corporates, focusing on system improvements with cost reduction approach. He is closely involved with several national level institutions, presently on the boards of National Stock Exchange, Nelco, which is a Tata enterprise, Max Group of Companies, Chavalika Small Finance Limited. Further, he is a member of the External Rating Supervision Committee of CARE Ratings. Earlier, he was associated as a director with Oil and Natural Gas Corporation, IDBI Bank, LIC Housing Finance, UTI Bank, and many other reputed organizations. He is also associated with the development of cost accounting record rules for many industries as a member of the Informal Advisory Committee, Department of Corporate Affairs, Government of India. His efforts in the furtherance of cost and management accounting profession in India were recognized by the Institute of Cost and Works Accountants, which has honored him by giving a citation in October 2007. That's an excellent achievement, sir. Congratulations for that. And now I request you to kindly start with your deliberations.
Welcome, Mr. Narasimha Murthy. It's a great honor that you are here. Great, sir. Great.
Thank you very much. I'm privileged to come, back to the institute, my mother institute. And thank you very much, Nandaji, and thank you, Atul Bhadarji. You have given nice introduction to the management accounting. Thank you, and thank you all the NIRC members who are associated with this session. I'm really happy that I'm coming to the NIRC for the first time, but of course in SIRC and so many places I earlier given lectures associated with them. I'll upload my presentation. I hope you are seeing it. Hope you are seeing it.
Yes, sir. Yes, sir. Very much.
Yeah. So broadly, what I'll do, I'll give initially the introduction of the management accounting, and of course, Atulji has already given, but broadly, I'll give definitions which are given by our institute, various institutes. Then I'll take you to the importance and necessity of management accounting in today's environment. All the institutes, all the members, we are facing onslaught of IT revolution. So everything what we were to do 40 years back when they got into articles in CA, the things have all become automized now. In those days, the tallying a ledger and preparing a TB was a great thing for a chartered accountant. And certifying financial statements was a great thing for chartered accountant. Today, the whole world is changed now with IT coming into. So more of a relevance of management accounting with so many frauds going on around and increasing regulatory, activism. The importance of management accounting, has come. So in this background, I'll present the whole presentation and various management information report relevant to various sectors. So I am associated in the last 40 years with more than 60, 70 sectors. So I'll give, for the sake of brevity, each sector may take 1 hour, but for the sake of brevity, 5, 6 sectors, I'll give it in this 1 hour, flavor of them. So coming back to the definition of management accounting, IFAC has defined management accounting as a profession that involves partnering in management decision making, devising, planning, and performance management systems, providing expertise in financial reporting and control to assist management in the formulation of implementation of organization strategy. In fact, these things were well mentioned by Nandaji and Atulji in the introduction. And in other words, management accounting helps directors of an organization to make informed decisions. I'm not repeating, they're well repeated. Earlier mentioned. The information analyzed includes financial data, quantitative data, statistical data, market data, competitor data, economic data, supply demand trends, global trends, applying analytical tools for making informed decisions by the management. So these are the things defined by IFAC as a part of management accounting. And the Association of AICPA has defined management accounting as a practice which extends to the following areas: strategic management, advancing the role of management accountant as a strategic partner of organization; performance management, developing practice of business decision making, managing the performance of an organization; risk management, contributing to frameworks, practices of identifying, measuring, managing, and reporting risk to the achievement and objectives of the organization. Today, the whole environment, as we are seeing in every business, it is prone with several risks. What are the risks? As I move forward, we'll deliberate. The Institute of CA, England and Wales, defines management accounting as any form of accounting which enables a business to conduct more efficiently. American Accounting Association, AIA, defines managing accounting includes the methods, concepts necessary for effective planning, for choosing among alternate business actions, for control through the evaluation, interpretation of performance. So, IFAC model brings, management accounting in 3 buckets. Cost accounting, where external for the sake of external financial reporting, where certification, where process-wise costing, utilities, valuation of work in progress, cost of goods, cost analysis, cost variance, compliance of cost accounting, record rules, and regulatory reporting, as like financial reporting, compliance of accounting standards, here compliance of cost accounting standards and record rules, and performance evaluation analysis, assessment of current strategy and plans, integrated cost operational performance, various analysis reports, variance reports, profitability reporting, process analysis, learning and corrective actions, planning for decision support system where fully absorbed and incremental costing, adaptive operational cost-based planning, budget, product process, enterprise organization make or buy. Broadly, the management accounting IFAC buckets into 3 broad buckets. And what are the tools available for management accounting? Financial statements, cash flow, functional analysis, cost accounting, cost analysis reports, ABC costing. Today, with service sector, which is growing at, in the GDP, now it is 55%, which is capital intensive, the ABC costing becomes more important. Marginal costing and contribution analysis, standard costing, variance analysis, process costing, absorption costing, and incremental cost versus incremental revenue analysis, revaluation accounting, decision-making accounting, statistical techniques, and management information system. Broadly, various management accounting tools can be clubbed into these, 6, 7 buckets. Coming to increasing relevance. So I can only say in the last 4 decades of my active professional, life, we have seen Harshad Mehta, then, your Kirit Parekh, the Parekh scam in 2000s. I know when I was a trustee of UTI during revival, I have seen UTI in such a crisis. Very tough times we had along with Damodaran in reviving the UTI. When I see the whole past of 40 years, different buckets of time, we have seen various corporate failures. Various failures, for example, financial sector, you know how ILFS has got into trouble, DHFL has got into trouble, infrastructure sector, so many, road projects of, infrastructure projects got into problem. If you know, Badaji, Atulji knows, as auditors, we know various banks, what are the type of NPAs, infrastructure. Airline sector, how many airlines have gone bust in the last 20 years. Starting with East West Airlines to Modi looked to Damani Airlines to whatnot, Air Deccan, whatnot. So many airlines got into problem. Banking sector, GTB, many banks got into trouble recently, PMC, and many cooperative banks. Insurance sector, of course, it is nascent, last 10, 15 years of existence, but there are some insurance sector like Religare, Reliance, which are facing problems and which are getting merged with other, takeover. And telecom sector, what is the problem faced by the various telecom operators like Aircel, Uninor, Tata Docomo faced problems. And entertainment sector, we need not talk about. Various sectors getting merged, reorganized, closed. So many media sector, in the entertainment, education sector. Many engineering colleges, many colleges start and they got closed, corporate colleges. Health sector, Mumbai, Manke, many of the Mumbai friends know, or the Manke hospitals, the Delhi large hospitals also, got into problems. Many hospitals are getting taken over. IT sector, Sacham, and many other IT large corporates got into trouble. Power sector, I need not talk about Gencos, Enrons, and recent lot of generation companies with thermal PLF coming to 45%. Can you ever imagine the thermal PLF, which was 80% in 80s and 90s, today post even in 2000, last decade, last 5-10 years, the whole power sector from wherever 85 PLF, now it's 45-50 PLF with non-conventional energy taking over. They all become and manufacturing sector. I need not name here, different sector, different NPA lists of banks. So consequently, what we saw in the last 3 years is, consequently, the governance and regulatory frameworks are getting increasingly tightened. So, in fact, the whole spectrum of governance has taken a new leap. No more corporate governance will give delivery to justice to shareholders. It requires enterprise governance. So, the whole gamut of governance has taken a new look in the last 10 years, 15 years. So, what is enterprise governance? The enterprise governance covers the efficient resource utilization through effective performance governance in addition to good corporate governance. So earlier, the whole focus, is corporate governance. The good corporate governance companies do well. But it need not be. You are seeing good corporate governance companies, they are failing. The problem is, at the board level, you don't get performance governance. Proper performance governance missing, where the whole enterprise governance, the concept of enterprise governance now has taken a new lead. So in the strange enterprise governance, the management accounting plays fulcrum role. The performance governance, the management accounting becomes the base for good performance governance. Unless you have strong management accounting, the performance governance, cannot be effective. So issues for management accounting and management accountant. So in fact, sir, I believe both the professions, the CA Institute and the Caste Institute, they are passing through a turning critical phase. The income tax advisory services have taken over earlier return filing and all that is taken over by the IT and information technology, all the governance, preparation, verification, even that have become, IT tools. More and more with the changing role of the needs of accountants, I think everyone has to change to become a management accountant. So what I broadly take up in this issue is corporate governance issues, performance governance issues, and service sector. I'm starting with service sector more, and then manufacturing sector. Why I've taken service sector is today the economy is somewhere, the service sector from 5 to 10% in the last 20 years, today it is occupying 55 to 60%. I believe that both the institutes have to play a major role in preparing our members to face the challenges thrown by the service sector in this field of management accounting. So the manufacturing sector, both the institutes and both the members are well experienced since this is coming over the years. But unfortunately, the manufacturing sector somewhere around 55-60%. Now the percentage of contribution to GDP has fallen to 20s and 25. So in this background, the issues for management accountant, I would like to take in the 4 broad buckets. What are the corporate governance issues? If you see, the first and foremost is diversion of profits. And how does it happen? Related party transactions. So the corporate governance, whenever I talk of this subject, whenever I hear the people talking Cadbury report, blah blah report, blah blah report, some foreign names they mention, I get really upset. To be very frank with all of my Indian friends, I can only say the governance is in our blood. From the days of Rama, from Kruta Yuga, from the days of Ramayana and Mahabharata coming to Kautilya, governance is in our blood. If you read the Kautilya Arthashastra, you are given do's and don'ts for every function in the role. So therefore the governance is the spirit, not rules. When some foreigner comes at 6:30, very popular fable I will share, when Kautilya was a prime minister of the dynasty, when there is Gupta dynasty, when they're sitting there after 6:30 in the evening, when the foreigner leaves after official discussion, he closes the lamp and other lamp he lights. Then the foreigner asks him, why are you closing this lamp and starting another lamp? He says, this is Sarkari lamp, my duty is over. So that is the level of governance. In fact, Kautilya gives do's and don'ts for auditors, do's and don'ts for accountants. So this is the level of governance we have. So unfortunately, maybe due to British Raj or the Mughals invasion, we lost governance somewhere. And I'm very happy now, the governance is given role, but the ethos given by the Bhishma or the Dharmaraja or the Rama, they are not coming out. In fact, they should be brought popular where we have very strong corporate governance in our blood. And then comes the high ethical values and high level of probity, and spirit is more important regarding corporate governance issues. Increasingly, what we are seeing is, we have seen Nirav Modi, we have seen Karvi, very unfortunate recent incident of Karvi where 2,500, 3,000 crores of public money has been diverted, and the whole many thousands of people lost their funds. And willful defaulters, they're all the corporate governance issues. Then distorted segmental reporting. I need not tell you, we are daily seeing various P&L accounts, but classical case is Enron, where the debacle of Enron is said to be, the root cause is, the distorted segmental reporting and poor risk management systems and resultant losses. The typical failure of Fortis Group, such a legendary, we all, by Mohan Singh, we all revere him and respect him, the great group grown by him. Unfortunately, Fortis, with a lot of expansion with the proper risk management systems and governance practices, got into trouble. ILFS, poor risk management system, the way they went in, the inventory valuation, day in, day out, I can tell any number of experiences. Daily we face a lot of problems with our clients for getting into it. and lack of shareholder information on key efficiency parameters. I really feel earlier when I used to see the balance sheets in 1956 Act, Schedule 6, immediately we used to get where is the inflation, either opening stock, closing stock, the valuation figures given the schedule. In fact, the post-IFRS, 2013 post-IFRS, we have large information. I don't know, I can't detect, a critical information about inventory valuation. So therefore, what I mean to say, these are the issues which are challenges for us, and I don't want to get into corporate governance issues and detail in this, since this session is for management accounting. Now I'm giving a flavor of it. Since I have mentioned about enterprise governance, now I am going to performance governance. The very important performance governance, where as a management accountant, we play a vital role. I believe today the chartered accountants and the cost accountants, we all have to become management accountants to deliver, in the change governance and in the change regulatory environment. Everyone has to become a management accountant. That's what I strongly believe. The performance governance, covers strong strategy formation and monitoring. I have seen a lot of companies, professional companies, public sector undertakings, promoter-driven companies, private companies, I strongly see professionalized, board-driven companies like Max Group, one of the groups where I'm associated, proud to be associated, and, Tata Steel, Tata Group. So they are more, the board level, more of a focus on strong strategy and formulation monitoring. So this gives a lot of comfort at board level, a lot of MIS on performance monitoring, good organization performance management, measurement and review systems, where well-run companies, I see this type of board level performance management and review system, continuous value addition efforts as a part of management. In fact, I remember in 1987, I designed Kaizen concept. I don't know, Kaizen has come in 90s, but for Rasi Group, I designed, unknowingly, necessity, mother of innovation. I designed a system where the everyday innovative value engineering solutions coming from down level to where valuation efforts are the part of organization culture. It was well implemented, and various SIG companies where good promoter-driven SIG companies got revived by this continuous value addition and value engineering approach. And cost management systems focusing on productivity improvement, cost reduction, waste reduction, value enhancement. This is very important for good performance governance. Various places, good corporate governed companies, they are losing here. You can see, I don't want to name good corporate groups. There are so many groups which are known for good corporate governance, but the share price is very low, their profitability is very, very low, their GP ratios are very low, their performance is poor, basically due to lack of good performance governance at board level and lower down. That's my feelings are. I mean, you can keep, there's so many members are participating in the session, they can themselves analyze how many companies, corporates with the audit, without good performance governance, is quite a good corporate governance, they're suffering. So root cause analysis, value engineering, they play a very vital role, and strong MIS and timely reporting on KRAs, measures of success, performance yardsticks, and effective performance review systems at different levels in reporting. I strongly believe without proper performance governance, having good corporate governance sometimes may lead to operation success, patient dying. So therefore, you may do something very systematically, but ultimately you may not get success. So now, what are the performance governance issues? Why the situation has come? If I see 1970s, late 70s, in the early 80s, when cement industry got liberalized, then delicensing has come, and 91, in the Manmohan Singh and PV National regime started delicensing and reduction of custom duties and all that. 95, 96, Chidambaram finance minister during his period has come, and gradual removal of, government regulations, then opening up of a national barrier to global competition. Sometimes something goes wrong, it has, unplanned way, the reduction of customs duties below the, WTO rates of 5%, 20%, 95, 96 has created lakhs of, NPAs for the banking system. If you see the debacle of the problems faced by ICAI, IFCA, IDBI, suddenly all the institutions in early 2000 is a result of the 95, 96. Sorry to use my view. Sorry to say that unplanned, hurriedly, bringing down the import duties from 200% to the 0%. Some other times 180, 190 came to 0. That has given the result to the whole removal of this debacle, and national barrier suddenly opened to global competition. And another important thing happened in the last 20 years is faster technological development, leading to the obsolescence. You have seen the mobile sector, the amount of mobile phones. What happened to Nokia 4 or 5 years back? Nokia has nowhere it is seen now. So the technological obsolescence is seen basically in technology industry, shift in demand for qualitative efficient services. The demand taste of customer has changed from drastically changed. Everyone wants a high quality and efficient service at a low price. So shifting seller's market to buyer's market, severe competition from global markets, consequentially contagious effects of economic cycles, frequent business cycles. I remember in 70s and 80s when sugar industry is up for 3 years, it used to be down for 3 years. And again, the classical Keynesian theory that when the demand goes up, new capacity will come. When new capacity comes, sickness comes. All these cycles, all that has gone now. Now the cycles are 6 months, 1 month, 2 months, 6 months. The cycles are very drastic. In this situation, very important is at board level, managerial level, you require a lot of market intelligence. Not only the financial analysis and governance, corporate governance, you require a lot of deep insights into market, changing trends, and your reaction time to the. I remember when I was a APADC nominee on the board of a egg powder company. We used to have a capacity of, I'm talking about 99, 98, and suddenly the capacity utilization came to 0. I was surprised. I asked board, management, what happened? Somewhere in in those days, mad cow disease came. When mad cow disease came, everybody started taking, egg powder and, this type of thing. Suddenly, the demand went up. When the disease came down, globally what happened? They started blaming India, saying that 0.003%, something residual, pesticide content in egg powder, and some boom came. This is, they're all unknown. These are quantitative restrictions. These are type of restrictions which are trade barriers, without any reason, rhyme. So by the time you proved, all the Indian companies have become sick that there is no residual pesticide content. What is 0.0? How the pesticides get into egg, and when it comes into powder, how it can come into powder? It beats logic, but unfortunately, 500 crore NPAs came to the banking system. This is the problem. So the performance governance issues play a vital role. That's why the management accounting, become more and more relevant in the new age. So now I will throw light on the service sector. You may say, Murthy, why are you taking service sector first? As I mentioned, with major contribution to the GDP, everywhere we have services. I am starting with service sector challenges. Then I'll go to service sector. What are type of management information reports? The challenges for service sector is high investments in technology. You create an airport with so much of investment, the variable cost per passenger is quite low. And the fixed cost is there. You create a major infrastructure in a health insurance with so much IT background, your variable cost per issue of a policy may be sourcing and testing, maybe very less, but the whole fixed cost is quite high. And hospital, you create such a CT scan, equipment, the investment, the civil structures, the capital investment, the air conditioning, the variable cost is less, the fixed cost is high. So this is where banking, the IT backbone, and mutual funds, the amount of IT backbone, practically the variable cost is quite low. So high investments in technology That is where the real challenge comes, in the sector. Then high obsolescence and consequential upgradation costs. The obsolescence is going so fast. This requires upgradation continuously. You believe it or not, we are spending huge amounts of upgradation. Whichever company I am, on the IT, I've been seeing from the days of UTA Bank in the formative stages. I was a director in 90s. Now it is Axis Bank. From those days onwards, the amount of investment going on in IT upgradation every year after year. I used to build the capital cost this year. Then we realized the same thing is happening every year. And technology cycles shrinking even below 3 years. You can see medical equipment and so much of IT equipment, the technology cost is sinking, the shrinking, and fierce competition. And with a liberated environment, your competition, continuous product upgradation. You take your iPhone or your Samsung every day, every 3-4 days you are getting upgradation. New features are being added. So this is continuous product upgradation is having in every in the service sector. Short life of products. Every 2-3 years new product is coming. People-driven high employee turnover. This is one of the very toughest part in the service sector challenges. Why I've chosen the challenges initially to brief in this meeting is the need for management accounting and information reporting depend to we have to face all these challenges. Our information reports should timely, properly, dependably, credibly supply information to address all these challenges. That's why I wanted to highlight the challenges which service sector is facing, is high employee turnover, training people, initially they make mistakes, lot of audit issues. As audit committee chair of Max Life or all service sector industries, Max Health or wherever I am, the problem of high employee turnover is getting into compliance issues, both regulatory and other compliance issues, training them, and to train them, again they leave in 2 years. So the attrition is causing a problem, and human skill upgradation is another challenge, especially in technology. I used to be the board of another high technology company of Tata Group, where technology upgrading, marketing. For example, your technology product sale, a showroom like a Chroma, you can imagine how tough I have to keep a person upgrading in the shop floor. When the new product comes, you have to be educated before guiding the customer how to operate it. And value-added services, customer retention, consequential high costs. You are seeing telecom sector. The whole telecom sector daily you are getting a lot of value add. So they are surviving on value add services. Today, the IUC, the inter-unit, IUC, that is inter-transfer from one Airtel to another service provider becomes zero now. So how still they are surviving? So they are surviving only based on value-added services. The telecom rates have come down, but they are charging on your WhatsApp or whatever other messaging services, different services they are charging. That's why they are surviving. So all the challenges require success strategies for efficient resource utilization of technology, infrastructure of employees, maximization of revenue and value addition. Earlier, Atulji talked about banking challenges. I am also bringing the banking challenges next to sector, next to slides. So these challenges are bringing the need for efficient management reporting to board for timely decision making. The service sector, if you see the banking, the technology, value-added efficient services. If some people, seniors in this group, if they rewind back in 95 after new private sector banks came, the HDFC Bank and UTA Bank used to fight every day. New value-added product used to come. That's why they have survived. They are doing very well now. So insurance product innovation, you can imagine, the LIC, the product innovation of LIC and other private sector. LIC used to have standard products. Today, they have lost around 25% market to the private sector. The private sector is growing day by day due to innovation, product and quality of service. And telecom, we have discussed earlier, and BSNL, you must have seen the classical failure of BSNL before us, the problem they faced. and even the BSNL mobile doesn't give value added. It can't compete with other services. And airlines, as I mentioned earlier, the Midwest or Moody Loop, East West, Sahara, the Damania, well, you name it, all the majority. Even today, Jet Airways, recent Kingfisher, Jet Airways, they all, the efficient service and high volume through price reduction, ultimately undercutting the air Deccan fellow. Of course, I have different views. Some people may differ. The air Deccan fellow has killed the whole industry by doing, carpet bombing of the pricing and entertainment broadcasting. You can see what happened to DD. Doordarshan has gone. Where is the Doordarshan now? So, what is the viewership? Government is funding Doordarshan. In fact, I know I was a Prasar Bharati restructuring committee member in 90s. I have seen the amount of problems they faced in terms of high cost of investment and redundant technologies and obsolete people and obsolete techniques. So this is where we can see a lot of case studies where the service sector has failed. Coming to the role of management accountant. So in these challenges of service sector, where is our role as management accountants? Is product pricing, services pricing, product profitability, customer profitability, delivery channel profitability, department profitability, real-time asset management, liability management, especially in all the BFI sector. BFSI sector is a major sector today. You see all the cooperative banks failure is nothing but lack of ALM, failure of ALM, borrowing short, lending long, and all sorts of mismatches, liquidity mismatches, associated risks in the financial sector, and information support employee reward system. This is very important in service sector if you want to retain good people. So what I would like to say is role of a management accountant becomes very critical in these areas where you have many products, capital cost is high, variable cost is low. How to product price it? Then very essential you require an ABC costing. The different costing techniques, management accounting techniques, services pricing. You see the airlines, what type of services? I am dealing airlines next. I've dealt with detail in the services sector. Of course, I know another half an hour I have. So whatever possible in the given time, I'll try to share my experiences and knowledge with the team here. So therefore, these are the areas where you require a strong management accounting requirements and tools. I strongly believe future is service sector. For service sector, in addition to regulatory requirement, more of a management accounting requirement is there. That's why all the service sector looking for this profession to fill the gap and requiring detailed management accounting system, function-wise, activity-wise, product-wise, cost income analysis, joint cost, common cost allocation system, basically where the same IT platform is onboarding a customer, servicing a customer, and at the end of the day, giving till the end, throughout life of a customer is giving so many products, is giving how to cost and how to price the service. So detailed common revenue allocation, credible transfer pricing. Transfer pricing is very important, not only from the angle of corporate governance, but also from the angle of performance governance. You should know which product is making profit. An effective real-time manner for timely management corrective action. I think all the above require efficient resource utilization for heavy investments in technology. And now I'll start with life insurance products. Of course, I'm taking in this life banking, which is, you all, every chartered accountant is involved with banking. And then I'm getting into some other sectors like health, airline, and some sectors I'll deal it for the sake of giving a flavor what type of reporting and what type of functions they have. Life insurance, different types of product portfolios, participating, non-participating, long-term, annuities, ULIP, guaranteed, and you'll be surprised to know, my dear friends, every product got a trial balance. In a life insurance, accounting, totally different from the our regular accounting of a entity where every product is got a trial balance and a P&L and balance sheet. And another important, the heart of a life insurance is investment. So unless they have a strong performance governance system in investment, it can't give you the good returns to my customer. So bonds, equity, loans, real estate, other long duration assets, derivatives, they're all exposure norms are driven by the IRDA regulatory limits. Then you have and various functions, your marketing, product development, new product development, actuarial functions, which is like a lungs for the insurance company, operations control. Then you have a treasury, IT setup, which is main for the whole backbone, like a nervous system, accounts, internal audit, marketing. I mean, of course, marketing covered legal compliance and board and top management. These are broadly the insurance company functions. And the types of risks insurance industry faces: underwriting risk. Today, the frauds are taking, lot of frauds are taking. This is a very risky area where some people are not reporting proper diseases, what they have, pre-existing diseases. Then if you take a policy, get into a problem. So reserving risk, reinsurance risk, financial risk, your capital, investment, liquidity, credit, foreign exchange, taxation, market risk. Operation risk is very laundry list of operation risk where your sales distribution risk is a major risk. Your business targets you have to achieve the as per regulatory requirements, and concentration risk, claims risk, customer risk, people risk, governance risk, financial reporting risk, information security risk. You must have seen the recent NSC problem about IT, problem. So fraud and crime risk, regulatory risk, business continuity. So this is a whole laundry list of risks involved in the insurance, and the similar risks you will have in all the BFSI place, banking and financial, NBFCs and insurance. Of course, insurance will have slightly more risk, but banking and NBFCs will have same type of. I'm only giving indicative. So these are the risks: the business environment risk, non-financial risk. So these are risks. So management accountant is supposed to ensure that effective MIS is provided to the board and various levels to prepare various MIS reports. I request the NIRC, I'll share this presentation with NIRC, and they can share with the members, whomsoever you want, the various types of MIS reports to address the risks and business needs in addition to corporate governance role. So this analysis, the various MIS reports cover financial statements, premium trends, expense ratios. Very important is expense ratios. In any insurance policy, you have given some expense ratio committed to the policy as per the regulatory requirement and as per the policy information memorandum. You give some limits. You should ensure those limits are maintained. So where very important fulcrum for this whole accounting is properly expense allocation between shareholder account and policyholder account. There we introduce ABC costing and we do it. So therefore, these expense ratios, monitoring, distribution, and the board is given vested with lot of I should say responsibilities. IRDA for everything going wrong in all these things pulls up the audit committee or with profits committee. So therefore, the board requires a lot of close monitoring of all these segmental ratios, key business indicators, key variances in the actual reserves. So whole laundry list of various MIS reports, they come to the board. So similarly, mortality, persistency, very well mortality tables and mortality issues closely monitored. Vis-a-vis the target and vis-a-vis the estimating the product pricing and surrenders, IRRs, maturity values, how much IRR I am giving. Certainly we should give every competitor, every insurance company, not only they look for a maximum IRR return to the policyholder in addition to the service level. So the whole laundry list of reports where the management and board expects to ensure that all the risks are adequately addressed, and corporate governance and performance governance is properly, managed. I don't want to take, in fact, Nandaji, when you gave the management information topics, I know it is very tough topic. There are so many sectors. Each sector will take 1 or 2 hours, for covering what type of risk they have, what is the depth of, the business challenges, and what are the types of MIS, management information reports, the board and management expects from the whole profession of management accounting. So banking sector, you are all aware the type of functions. I am only taking 5 minutes. I know I have another 20 minutes, 15, half an hour time. I'll broadly cover 15, 20 minutes, each one I'll take 5 minutes. In the banking sector, we'll all do concurrent audits. We know all the chart accounts. We all know what are the functions. But for the sake of brevity, I'm broadly bringing here, branch network, regional zonal offices, large corporate trade, stress asset management groups, risk management function, inspection and audit, merchant banking, treasury, IT setup, project planning, operations control, NRI, account, marketing, legal, board and top management, and various products of corporate banking, starting from working capital finance, and again you have different types of finances, agriculture credit, cash management services. Why I'm talking so many things here is, here very important is product-wise profitability, vertical-wise profitability, and where you have extra cushion to reduce pricing for competition, where you can do it. Many of the sectors post liberalization after 90s and 2000, the pricing is left to the bank boards and managements. So corporate services, DD charges, of course now everybody has removed the DD charges in the competition. Many of the people know very well the cost income ratio is very important, where other income compared to operating expenses, what is the ratio of a bank? If you see the S Bank or Axis Bank or private banks, the cost income ratio used to be around 80, 90. When I was in the Axis Bank board in the avatar of UTA Bank, we used to have 80 to 90. In some quarters, we touched about 100% cost income ratio, where the whole interest income becomes profit for the bank. So the cost income ratio is always very important. So like that, you have various product-wise, government business, trade finance, treasury products, emerging corporate business, vendor financing, channel financing, debt capital market, underwriting, funds management. There are so many products in corporate banking. And your retail banking, you can't imagine the number of products are innumerable. Instant savings banks, FDs, roaming current account, demat accounts, SMS banking, internet banking, phone banking, all these services, home loans, all these things you require, what is my product costing, what is product profitability, where I'm making money, how to push, which product to push, how to push, very important. Nowadays, banks have become insurance marketers. They're very important is what are their margins, and internet gateway payment, merchant establishment overdraft. Every product got NPA again. So the point, is product-wise gross contribution and product-wise NPA, then only pricing. The NPA today, what I've seen in the absence of this type of, the management information, broadly cost subsidy of, being borne. The NPAs of merchant banking, many of the things I've seen, the NPAs, the contribution is less than the NPAs they have. So everything is going in the NPA bucket. So very important for the board level management is where I am, losing, where I am gaining. This is, banking. Then of course I don't want to repeat, just broadly mentioned here, the indicative list of, the risks involved in banking. Similar to insurance, you have all sorts of risks. In addition, you have, the ALM risk is quite heavy in banks, where, of course, in the trade side, borrower risk, project risk, industry risk, portfolio concentration risk, this type of risk you don't find in insurance, but we have here. And, of course, market risk, interest rate risk is quite heavy here, and operation risk, IT system risk. Then you have regulatory risk, political risk. Political risk is very high for banking, more than insurance. We feel, you write off the interest. You say one day, I remember they remove the toll gate, fees. When we give annuity funding to infrastructure projects, tollway, roadway projects, the banks become NPAs, and the bank faced a problem when due to political strife, the toll collection is stopped. So therefore, a lot of political risks are there for banking. We have banking is facing problem basically due to political risk, I'll say, and disaster risk. We have to add new disaster, corona risk also. We're facing a lot of risk, strategic risk, legal risk. So what is it MIS reports should focus? In fact, when I started writing listing of the MIS reports for banking, which is running into 10 pages, 10 slides, so it has to address all the risks. And being bank auditors, all of us know what are the risks and what are the MIS they carry on. I don't want to get into more into it. I'm getting into the new area of airports, which is new to many of our people. We have efficiency parameters in the MIS. I'm going to reports now. I'm not getting into products and other type of things. Quickly getting into it. Capacity utilization, domestic, international, runway occupancy reports, parking-based occupancy reports, then aero bridges occupancy utilized and non-utilized, cargo fuel handling, leasing activity, various advertisements, availability, occupied percentages. Similarly, utilities, we closely monitor, wastages of water and per pack the consumption of utilities, chemicals consumption per KL of water, power driven and per pack power consumption. That means per passenger, what is the power consumption? We monitor with different airports, how it's going on. Very important for performance governance. And in fact, since I am associated with many of the airports, I will be, I can share with you that these concessionaires, so many places we could find out, excess dollars, underbilling of concessionaires, control issues, we have brought it out. So there are issues of recovery of concessionaires in terms of what is actual consumption, what is built consumption, maintenance side, per pack costs, life given, breakdown, root cause, margin analysis, for various activities of margin analysis. You all know, you must be seeing in the media, ERA publishes the tariff order. As for tariff order, you can see all these activities, landing, parking, UDF, PSF, aerobid charges, all these activities, the ERA takes into account. And you have dual till now in the airport sector. The 30% of non-revenue income is taken for the sake of funding the losses of aero side. Today, aero side, then the ERA fixes the UDF. In fact, the margins, what they get in the non-aero activity like, flight kitchen, duty-free, land lease rentals, advertisement, you see GMR or GVK airports, other airports, you see a lot of non-commercial, non-aero incomes, which 30% of it gets funded to the aero losses, then only per pack UDF is fixed. So for this board level, you require every activity-wise, what are the margins, how are you going, since the whole problem is ABC costing there. The whole infrastructure is used by everybody. How to allocate, what are the cost drivers? So therefore, this is the activity, board requires a detailed MIS, performance governance purposes. Then comes hospitality, hospital sector. I need not tell you is that today a lot of regulatory activism is there in the hospital sector. Government is reducing prices, putting pressure on margins. Insurance companies are bargaining with hospital sector about margins and product pricing. And in this whole really in the Delhi how Arvind Kejriwal is government is putting pressure on the Delhi hospitals. In this situation, the toughest challenge is the management board level. They should know what is specialty-wise, department-wise profitability, customer-wise profitability, channel-wise profitability, doctor-wise profitability. You mean channel means I have a PSU channel, I have a foreign customer, foreign patient channel, different channels, different ECSI, all these channels. So channel-wise, what are the profitability? And segment-wise, OPD, IPD profitability, package-wise profitability, key infrastructure, profitability, ICU wards, OPDs, radiology, pathology where high investments are there, what is the profitability, bill-wise profitability, capacity utilization. So a whole lot of MIS comes to the board, to the management, then to the summary to the board in terms of monitoring and ensuring good performance governance. If not, what happens? We will be knowing only at the end unless you do real-time monitoring with all the reports, at the end, I will incur so much loss, then the whole problem that by the time the loss you incurred, So various, education sector is becoming a very major service sector today is other education and real estate. So where you have a lot of per student, when we do the management information reporting to the education sector, capacity utilization, course-wise, contribution for course-wise, student-wise, and what are the variable costs and contribution. There also a lot of utilities go for mess and all that. Transportation per pack, what is the transportation? Per kilometer, the pricing is charged with per kilometer. One student may go for 20,000, 20 kilometers. One student may go for 5 kilometers. You can't give the same pricing. So their pricing changes. And the mess I need not tell you. There is so much of charges involved. You require detailed management information reporting on these areas. So location-wise, activity-wise summaries. And now then BPO industry, other major service sector is BPO industry, wherein you have large companies today. BPO sector is playing a very vital role in the Indian economy. We're all involved as auditors, as consultants, as management, consultants in reporting, management accounting consultants were involved, where a lot of information required. You'll be surprised to know the major cost of BPO is they try for 10, 15 projects, they get only one project. So 9 projects get infructuous, and how to account that cost of infructuous, project assignment sourcing costs and allocate to other costs. So this becomes very elaborate exercise, utilization of, parameters and utilities, and, their IT cost is major cost there, and activity-wise summary reports, budget actuals. So this is where you have BPOs and manufacturing sector challenges. I think broadly, I've given flavor of 4-5 sectors for the BPO sector. I don't know. I have 10-15 minutes time. The organizers have to caution me 15 minutes in advance. If not, I can go on talking, giving so many things, and I'll continue. Mr. Paul or Nandaji, you can give me 15 minutes in advance notice. So in terms of manufacturing sector, I think I have time up to 7:15.
So you have time up till 8:15.
8:15, thank you. So in the
We have the query session from 8:15 onwards.
Very good. Iqbalji, thank you. So in terms of manufacturing sector, we have seen the challenges. I have seen in the last 40 years, corporate failures post-globalization, paper industry has gone through tough times. It has seen many cycles. Old waste paper-based plants have all gone haywire. They have become sick. And agro-based residue plants have gone sick. And new type of industry has come. Textile, you have seen so much of upgradation. The whole starting with Kohinoor textiles in 60s, now in 80s and 90s, many textiles have gone. And sugar, you have seen. Cement, when I started my practice in articles in 70s, I used to see wet process, elephants driving, the elephants are being used for transportation, shunting in truck, rail yards, they've all gone. Steel, the whole process, the whole, where you steel of, early 80s when I was in Tata Steel, where is it now? The whole steel process is gone. So fierce competition, one challenge in the manufacturing sector is a lot of corporate failures, either due to obsolescence or due to bad governance, majorly I feel due to improper performance governance. The industries have not tuned with the changing time. So there our management accounting plays a vital role. And fierce competition, low price imports of MSME sector, skilled MSME sector, high dependence on imported raw material, intermediary material. This is what is happening now. And technology cycle shrinking, as I mentioned earlier, changing customer preferences, short life of products we discussed, high cost of trained and skilled manpower. Today we are not getting good skilled manpower from manufacturing sector. All good engineers are going towards IT enabled, BFSI, and nobody is coming to basic research. In fact, the whole engineering, whole universities are crying for, with all the vacant seats in basic fundamental research or basic sciences research. This is the cost In fact, the shift of service sector from manufacturing, the manufacturing sector is playing. In fact, I don't know, can we, produce Abdul Kalam now in the present age Abdul Kalams, in the change situation. The human skill upgradation, high establishment infrastructure sector, cost. These are the challenges of manufacturing sector. So the MIS, the Management Information Reporting, should give what is happening, what are the changes, what is happening, environment changes, how the strategic management, decisions the board level has to take. So the role of management accountant in manufacturing sector starts with, I'm only giving indicative list. When we do cost reduction programs for corporates, we do all this in manufacturing industry. Material reconciliation, batch-wise issues, returns, where yield analysis, process-wise, product-wise, material balancing, scrap reconciliation, also the product performance penalties, material accounting. In fact, many times outsourced products you get it with poor quality. They are all will affect your image. Source-wise landed costs, stock evaluations, inventory holdings, product-wise input analysis, yields, and then value engineering, indigenization, make-or-buy supporting, value enhancement, quality enhancement exercises, input cost reduction. A lot of value engineering has to go into input cost reduction, raw material mix analysis. In fact, recently with so much of coal prices changing, a lot of exercise went into raw material price and a mix analysis, how to change mix and consequential impact on overall cost of operation, and PPC, effective PPC, production planning control, reconciling excess drawals, optimization of inventory levels, just-in-time concept, close monitoring, and operational downtime, production per hour, monitoring actuals as a benchmarks, equipment-wise spare parts consumption, predictive maintenance. The days of preventive maintenance has gone. Today in the engineering side, the predictive maintenance, manufacturing side, the predictive maintenance has come as condition monitoring, where, in every industry you get, sound monitoring, gas monitoring, vibration monitoring, whatnot, Before you become a downtime, what is predictive techniques. Preventive maintenance, of course, this is an old concept. Major spare parts, spurious spare parts is taking life of manufacturing industry now. Foreign fuel consumption is a very big cost in any manufacturing industries. Process-wise, product-wise consumption, foreign fuel, group-wise stores, repairs, maintenance, chemical consumption, consumables consumption, packing material losses in another area, and distribution losses in another area, and ABC cost, classification for inventory holding. Of course, nowadays the overtime is fairly reduced. This concept is gone with liberalized labor laws, but still the PSUs and oil companies, they have still the overhang of overtime approach. Worker-wise, section-wise output analysis, worker-wise performance analysis, workload analysis, absenteeism analysis, accidents analysis, progress on implementation of various cost reduction programs and occasion projects. A lot of cost-based information reports like process-based cost sheets, component-based cost sheets, component-based outsourced costs, own costs, product-based cost sheets, product-based contribution, primary packing costs. In fact, primary packing, secondary packing, which takes a major cost. A lot of innovation, value engineering is going. You can imagine, how you used to get the products to home 20 years back, 30 years back. Now how the product packing is going on. Shrink wrapping has come where reducing the cost of packing. A lot of packaging cost analysis, cost reduction approaches are going on for profit optimization. So a section-wise admission overhead, net sales realization, lot of marketing, market-wise net sales realization, damages paid, destination-wise transportation costs, region-wise distribution losses, secondary distribution cost analysis, branch-wise. There are a lot of methods wherein optimization of cost goes on. These are the analysis reports which management accountant is expected to prepare to support the management. Action plan for disposal of non-moving stocks, liquidated damages analysis, discounts, commission, brokerage analysis, T&F agent expenses analysis. So these are various types of reports. The management accountant is expected to give from time to time for optimization of profitability, for improving the bottom line. So a number of examples can be given. I'm summing up in short. Management accountants have no choice but to meet the needs of ever-increasing business cycles, business challenges, by innovative management information analysis reports. My dear friends, I have been audit committee chair for last 25, 30 years in various boards. I see this, challenges, innovation. Every day, a new report I'll be asking. When I see business risk, I'll be asking a new report. So sometimes the management struggle to prepare, but they prepare, and I'm lucky to have such boards, work in such boards. Every management is supporting me in terms of, that they appreciate that I'm adding value to them. They're supporting, they are doing excellent job in terms of, giving reports and getting benefited by them. So increasing focus on corporate governance issues, resulting in strong communication skills. What our management accountants have to learn is they have to improve the communication skills. Many times I feel the management accountants sometimes, they do a good job, but they lack, the way they communicate. I can give a simple example. An astrologer went to a kingdom. I am giving a small fable, taking a minute time. Minister told Prime Minister, such a great astrologer came, we should call him and honor him. The king called him and he honored him. At the end of the day, at the end of the honoring, he said, naturally king expects some predictions. So he showed his palm or horoscope and asked, what are the predictions to me? The astrologer said, you will see death of your children. And the king got wild. He felt, you are a traitor. Let him, this man is a traitor, hang him. 5 minutes back, 10 minutes back, he honored him with all the things. Then the outcome came, you put him to gallows. Then the Prime Minister got very much worried. He is passing by through our country. We called him, we asked him, we did all this. And when he said we are putting it very unjustified, he was overnight, he was thinking what went wrong. In the morning, he went to the king and told the king, sir, this astrologer doesn't know how to communicate. He means that he will outlive your children. The king got very happy. Oh, that is so. Well, excellent. Put him, release him. So the way we communicate the negative thing in a positive way, that's the skills the management accountants require for future. So I to sum up, not only information reports, you require good domain skills, not only require domain skills, communication skills for this. And post-COVID-19, as earlier Atulji has mentioned, it has thrown challenges to all of us. Not only that, business challenges, and in terms of risk monitoring, in terms of whole gamut of earlier, people used to go to offices. Now, new design of office has to come where the people may have to operate from houses. The residential, earlier 2-bedroom houses, you have to design 3-bedroom houses. The housing design concept may change. So new challenges, new business challenges, new retail. Nobody could thought, the Voyo will fail. The Voyo has failed. The Voyo is facing problem. The concept of Uber is facing problem. Everybody was thinking a new business model, it is facing problem. The brick and mortar branches and offices have gone haywire, and today all have become mobile offices. Every business is undergoing a challenge. So how the management accountants will give to face these challenges, and performance excellence through cost excellence will be the new mantra for survival. So how are you going to do your operational excellence will be the new mantra. And so therefore I believe our management accountants got great scope. And I wish the management accountants profession and our management accountants a great future. And one more finally, I request a person to mute for one more minute. Somebody is unmuted. Kindly mute for one more minute.
Ritunji, please mute yourself.
I strongly believe the solution for today's many social and governance evils lie in Indian conventional wisdom. Dharma, Artha, Kama, Moksha. See, earlier, our scriptures, our gurus have taught us, run righteously, attain salvation through righteous deeds. So this is a basic ethos of our culture. If we can follow the same ethos, I don't think so much of corporate governance issues will come. Finally, I believe righteousness protects righteous, dharma rakshas rakshataha. So with this, I believe our professionals, not only both the institutes, even the company secretaries, all the institutes have to follow the last slide, which uphold our ethical values and support the managements and corporates and the businesses in a rightful way to address the risks and the challenges thrown by the new business, ever-changing business environment. So thank you very much, and I thank Nandaji for remembering me, for calling me, giving me opportunity to interact, with all the chartered accountants all over India, NIRC, of course, others, and thank you very much once again. Thank you.
Thank you so much, Narasimha. That was an excellent presentation and deliberation on management accounting and its features across various industries. You have justified your illustrious profile, and I'm sure all our viewers are extremely benefited with your deliberation. A lot of members are requesting you to share your PPT. Kindly do so with the Committee of Management Accounting, and they'll forward it to everyone who's attended. Now it's time to move to the Q&A session. We don't have a lot of queries, just a couple of good queries that I found. So the first query is, what is the role of big data, artificial intelligence, and related technologies in the manufacturing sectors? That is Industry 4.0. Kindly enlighten us on the challenges and opportunities for us as chartered accountants. Let me know if you want me to repeat.
No, I'm through. I only wanted to know the caller, the name in case you. Who put the query?
Ankit Agarwal, C. Ankit Agarwal.
Thank you, Mr. Ankit. The whole big data analytics is nothing but mining data and giving information. Today, the manufacturing sector, throws out, if you have a global trends, what is happening, global losses. You take a simple sector of steel industry or a cement industry. What is the power consumption? What is calorific value of coal consumption? Kilocalories in the whole global, scenario, and what it is, how it will benefit to us, how to get it. So this where the big data analytics and Internet of Things is going to help us. In fact, all of us are using, QBL language and ACL in our audits. When you are using QBL and ACL, how we are mining data. The simple QBL and ACL is throwing out the various audit, outcomes which are enabling us, which are enlightening us, which are giving. Similarly, the business and the big data analytics and Internet of Things will certainly throw light on the global analysis of data and root causes, how they are achieving in the manufacturing sector. I'm sure they will achieve in terms of process losses, major consumption parameters, what is happening globally, and how to achieve those benchmarks. So today I don't have good benchmarks. If I have to get the benchmark, I can only get some national numbers. Many of the benchmarks are not shared publicly. So therefore, I think once this big data analytics comes from the financials, from various numbers, these analytics will help in the manufacturing sector to have proper benchmarks for them. Hope, Ankit Bhai, you got the answer.
Thank you, sir. The next query is from Mr. V. Subramani Iyer. Kindly share practical cases where management accounting was applied to overcome or reduce the impact of COVID-19, business continuity, profitability, and reduction of risk areas. This query is from Mr. Subramani Iyer.
So I can give many examples, my dear Subramani Iyer. Thank you for this query. You will be surprised. A few industries are not affected by the COVID-19, and though they are affected, they could neutralize the effect. For example, your packaging industry. The packaging industry, they made a lot of innovation in terms of transportation. There are no sickness in packaging industry. They met the demands of the COVID-19 packaging, and still they have optimized their cost, and they have withstood the industry. Similarly, the agriculture sector, which is supporting the the agro without any downtime, they have managed it. And in terms of services sector, where working from home, they achieved excellent results. You will see, I am happy to share our Max Life Insurance achieved all the targets, more than what they have said, even during COVID, optimizing their costs, got new technology, in terms of, IT usage in their operations. And of course, there are such challenges, they face challenges, but they plug it properly, the leakage issues. So therefore, the IT application has helped optimize. And in the service sector, the banking and financial space, they have delivered services and optimized. They performed well in this COVID-19. They have taken challenges head on and they have performed well. Even the health sector, have optimized their costs, but they are doing very well. I mean, they are serving it by using the IT, backbone very well, optimizing communication and serving to the clients. The retail sector delivery, in fact, unbelievable. The delivery models have changed, the delivery approaches have changed, and they found new approaches to optimize the delivery and to optimize the cost and survive in this COVID-19.
Thank you, sir. The next query is from Mr. Satyanaran Mundavora. His query is, what is the correlation between MIS and management accounting?
I think we have deliberated well. The MIS is a part of management accounting. The financial accounting, as earlier, our Atulji has mentioned, the financial accounting is purely financial accounting. Cost accounting is purely cost accounting. Management accounting is a merger of both. So a marriage of financial accounting and cost accounting to produce more effective management required reports to meet the business challenges and risks involved in business. So the whole concept which have been developed in the last 1.5 hour session is these management information reports are blend of marriage of confluence of financial accounting, financial data and costing data, operating data. Then you design so much of information reports in addition to market intelligence, statistical analysis, and so much of other market data. So if you say the MIS, I can probably say the three components. One is the financial accounting, financial data, operating data which supports costing. The third is statistical outside market intelligence. When you merge the three, you get the whole MIS, management information report. That is the job of management accounting. So the skills of cost accountant, traditional skills of cost accountant, traditional skills of chart accountant, how to upgrade themselves to become a good management accountant in the changing environment. I hope I have answered Mr. Satyananji.
Yes, sir. All right. So the next query is from Mr. Ashish Gupta. His query is, can a report on risk management be considered as a part of management information reporting?
What I feel, risk management is supported by management reporting. So risk management requires a lot of timely reports. For example, I am seeing, area-wide bad debt analysis. So that analysis has to come from management accountant. So every risk, in risk management, there are few, functions are there. One, risk identification, a risk quantification, risk monitoring, a risk fixation, or risk appetite. Every risk will have appetite. For example, my stop loss limit is, 5%. From where the information will come? Management accountant has to give me, management accounting information has to give me what is my actual stop loss. So therefore, risk management can function to monitor risk appetite, the actual management accounting information required to support it. My forbearance for anything, various risk management and various risk factors will have risk appetite. The risk appetite is the monitoring of risk appetite comes from risk management, management accounting reports. Therefore, management accounting and management information reports support risk management function. That's why I have highlighted in my presentation there are so many for banking and insurance, so that the management information reporting should address those risks, properly. That's a integration or support which risk management expects from management accounting.
All right, sir. Thank you, sir. This was the last query that we had.
One thing I would like to ask before Iqbal Singh, sir, this entire thing is being attended by over 1,885 people. So I suggest, Mr. Murthy, what would be your message to them? How can you make them understand that if they empower themselves, they'll be better placed in terms of professional opportunities and working in tandem with the best practices of the globe because of your being on boards, what are the expectations of boards, and more importantly, your great overview that shall help them move ahead and create very much gainful practice avenues for themselves. Over to you, sir.
Thank you, Nandaji. Thank you, Nandaji. I can only share from my life of 40 years. That whatever we learned 40 years back, whatever we learned 5 years back, whatever we learned 20 years back is changing. The situations are changing very fast. The adaptability is very much essential for the profession. And one of the great things, there is no luck in life, my dear friends, there is no luck in life. We should look with 1,000-watt bulb for opportunities. Every crisis gives us opportunities. Every failure gives us opportunities. So in the opportunities, how we fit in is the important point. What lesson I have learned, what the success, if somebody asks me a single success, reason for success is nothing but I look for opportunities. Every failure, every challenge of business, every challenge of economy, I felt, there is opportunity for us to help the businesses. So how to fit in? So we as chartered accountants and cost accountants, we should forget our role as a traditional accounting function, certifying, compliance of accounting standards, IFRS, certifying. We should go out of it, beyond which, how are we meeting the business challenges of our client? So what are the new risks in each client? If you do risk analysis of each of our clients and try to pitch in and value add, I think world is yours. World is yours. This is how, from my 28th year onwards, I'm on the boards of various companies. This is a journey of, for almost, I should say, 86 to 21. So 1986 to 2021. The only thing where we can succeed is how are we molding ourselves, changing with the changing needs of economy, changing needs of business, changing needs of our profession, needs of profession. We have to change. That is the success mantra for all of us. So for all the youngsters, elders, of course, elders, I need not, they will post me safe. I hope they will agree with me with their experience. The youngsters, my message is, come on, arise, awake, and world is yours. We can only take Vivekananda's slogan, world is with us. You have to change with the changing needs. You have to meet the changing needs of society.
Thank you, sir. Thank you for a very versatile, very robust answer, which is true to the same. We need to empower our small and medium practitioners to ensure that they reach to the apex top only by following the advice given by you. We have to understand that now times have come that we have to move from attest to non-attest. We have to move more into management consulting rather than being on a certification part. Thank you so much, sir. Over to Mr. Iqbal Singh Grover for his further endeavors. Mr. Grover, the dice is all yours.
Thank you so much, Nanda sir, and thank you so much, Narasimha sir, for this wonderful answer and for all the answers to all the queries. A lot of members have sent their thanks to you for a wonderful session and for such a beautiful presentation. It indeed was an exhaustive one, and you've almost covered everything that they came here for. Thanks a lot for that. Kindly share your PPT with the committee so that they can share it with all the members who attended this session. Now I request Mr. Rajesh Bansal, Secretary of the Sirsa branch, to kindly propose a vote of thanks to this wonderful session. Over to you, Rajesh ji. Please unmute yourself before starting.
आज का जो वर्चुअल मीटिंग मैनेजमेंट अकाउंटिंग साइट्स मैनेजमेंट इंफॉर्मेशन रिपोर्टिंग का बहुत ही वंडरफुल रहा। इसके लिए आज हमारे सेंट्रल काउंसिल मेंबर और जो मैनेजमेंट अकाउंटिंग कमेटी के जो चेयरमैन है नंदा साहब, उनका जितना धन्यवाद किया जाए वो कम है। और जो आज के हमारे जो सीए अतुल जी और जो एमिनेंट स्पीकर जो नरसिम्हा मूर्ति जी, जिन्होंने who has given a lot of valuable knowledge and time to all of us, बहुत ही वंडरफुल उनका सेशन रहा। he has given all the answer of the queries and explained all the things relevant to the topic very well। तो और जो इसके अलावा जो हमारे जो इकबाल जी जो प्रोग्राम ऑर्गेनाइज करवा रहे थे, और जो ज्ञान जी, अमित जी, और जो जिन मेंबर्स ने इस प्रोग्राम को ज्वाइन किया, उन सब का बहुत बहुत धन्यवाद करता हूँ। आई थैंक यू ऑल ऑफ यू फॉर दिस वंडरफुल सेशन। और बहुत ही इंटरेस्टिंग, बहुत ही बढ़िया प्रोग्राम रहा। तो वंस अगेन नरसिम्हा मूर्ति जी का बहुत बहुत धन्यवाद। और बाकी जो सभी मेंबर्स, नंदा साहब जो कि हमारे सेंट्रल काउंसिल मेंबर, और इसके अलावा भी उनकी पर्सनैलिटी की हर इवन ऑन ए सिंगल कॉल ही इज अवेलेबल, तो उनका और बाकी सभी मेंबर्स का जिन्होंने इस प्रोग्राम को ज्वाइन किया, आई थैंक यू ऑल ऑफ यू। थैंक यू वेरी मच। थैंक यू टू ऑल ऑफ यू।
Thank you, Ji. Thank you. Thank you. All the NIRC. Thank you very much. All the institute members. Thank you. Dhanyavad.
Thank you, Mr.
Thank you,
Murthy.
sir.
It is starting of a relationship. We'll call you more often to enthrall, to put our members in the right perspective. We'll call you in our Introductory Standard Board also. It is great that members could listen to words of wisdom from you. I'm thankful to Rajesh ji for his vote of thanks, and particularly Iqbal ji, who was thoroughly glued to the set since the inception of this program. Thank you so much. Over to Iqbal ji for the concluding remarks.
Thank you so much, sir. It was indeed a pleasure for me to be an MOC for this wonderful session. And honestly, I wouldn't have listened to great people like Narasimha ji had I not attended this session. And it was indeed a wonderful experience for me as well. Thank you so much to the Management Accounting Committee for organizing this session. And I hope to see good sessions in the coming, in the future as well. Thank you so much, everyone. The meeting is now over. You may leave the meeting. Thank you. Thank you, Narasimha sir.
Thank you. Thank you.